Hi traders and welcome to the Technical Analysis Market Watch on Friday the 31st of October. So we've seen earnings and data take center stage this week and the trading has been pretty good. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, we'll start out here with the Russell 2000 today, and we can see that we've seen basically a weakness of 4 candles in a row all the way down to the 20 moving average. We already knew that we were starting to get a bit of a decline early. If you go to the smaller time frames, even if you go to a 4-hour chart, which is one of my favorites, you can generally see a pretty good pattern forming. And you can see here, once we got this top, we started to see the weakness, and then we broke it down, another lower high, and then down she came past the moving averages. So if you go to the right through the time frame, you'll see quite a deal of selling off. As you can see, the patterns right through all the way down. And then even on the 15-minute chart, if you go through, and you'll see effectively right from the very top on that one, basically the whole week has been selling. So really good trading opportunities on what you already know is a potential weakness in the trend. You can see all this selling off, 4 candles in a row, effectively after this little mini. It wasn't really a gap, but it was a bit of a strange one in terms of how the market jumped. It did it on the other indices as well, where the open and the close were a little bit separated from each other, but it has weakened since. And the 20 moving average has been a very important barrier for the Russell. And the Russell, especially during earnings season for mine, is probably a bit of a proxy for what's actually happening in the other indices, because it's represented by so much more that represents the economy. So with 2,000 companies, of course, going through earnings season. Now, it's been respecting the 20 moving average all the way, but 4 very weak candles in a row is testing very heavily the 20 moving average, as we can see here. So very interesting trading. If this level holds up, then it could be happy days, and the earnings might just start to kick on, and we start to see a move back to these previous highs. But if we get a daily break past here and the weakness continues, all of a sudden we could be looking back at around this sort of 2380 area where the next real support is. And that could spell a significant decline in the S&P 500 and the NASDAQ, because as I say, I think this is a bit of a leading indicator to the other two when we are in an earnings season. And this has certainly been weaker than the other two combined. So certainly one to keep an eye on. Really good trading on that. We'll go over to the dollar index, and another really big day on the dollar index. Been very good trading here. As you can see, our high low sequences are still working. We are just struggling to break through past that 99.60 with a daily close. Once we get that, today was the closest we've been in a little while, but once we get that, I think that we're got reasonable opportunities up to the 150 here. As you can see, the first very strong level of resistance, but I think if we can break out of this zone, which is a really important zone that's proven very difficult to get out of, but it's not just because of what's going on here, it's been what's going on over here. Okay, we've got a lot of support and resistance right through this level. So we really want to see that broken good and proper with a daily candle to give us the momentum shift to justify really why we've got so much movement going there. And I think when we get that momentum, we can start to follow the higher low sequences on the smaller time frames a lot more clearly. And I wouldn't even be looking for shorting opportunities on this one right now, because I think it's just a little bit too strong. The only way I would do that is if it was trading underneath the 20 moving average, which obviously still a little bit away. So look for a break of that zone either in the last session of the week or early next week. And if we see that momentum continue on, I think this is our next target. And of course, that would signal a shorting of the euro, which is really what we're looking at trading at that point, which is the inverse of what is happening here. All right, we'll move over to gold, and gold's seen a little bit of a resurgence in the last session. It's obviously been very weak for the last, several days actually. Now, this is the first candle that's actually going to close above, because as you can see, both of the previous day's candles, both attempted to go longer and attempted to go past the 20 moving average and failed quite dismally actually, and both of them look quite significantly weak. But this is the first candle that we've seen that is actually closing at around the 20 moving average. So this is going to be a real tester, because this actual level has interacted with the last 6 candles. As you can see, not only do we have a 20 moving average here, but we've also got 3 wicks that have actually attempted to stop the rut of gold at the 20 moving average from above. So all of these levels have interacted with this price. and the 20 moving average is right there as well. So you're talking about that sort of 40-50 area. If we get a close above there on the daily and it's all of a sudden trading above the 20 moving average again, probably the first target I'd be looking for is the highs of these three indecision candles that we saw here at around that sort of 41.40 to 41.50 zone. That would be the first target on the long that I'd be going. I wouldn't be just aiming straight for the stars. I think we need to be sensible about it because we have seen a significant decline in this one. But if we see a turnaround here at the 20 moving average and it starts to push down again, the obvious target is going to be the low at around 3,900. So keep an eye on the smaller moving averages and timeframes. And if we do see a significant series of lower highs and lower lows, and say on a 15-minute chart, and the momentum starts to shift in any session, whether it's the last one of the week, this week, or early next week, I'd be looking at the initial target of 3,900 as the take profit. And once it breaks through there, if it breaks through there, the next real level is around here, around that sort of 3,700. So there is significant moves in gold, potentially just around the corner. We just have to be mindful of what happens at this level here, because it is a very, very significant zone, given that it's been one of the most touched zones in the last 6 or 7 days, given what has actually happened over recent times. So really good trading on gold as well, potentially coming up with some good opportunities. We'll have a look at oil now, and oil's actually really played the game from a technical standpoint as well. A lot of people got that long up to the 62.50, which is a pretty easy trade. So well done on that. And really the short to the 60 was just as easy because we saw the rollover at that point. Very, very important rollover zone. You can see we've got very, very strong support at that 62.50. If you go to the smaller time frames, you will know what I'm talking about. You can see here, that was where the resistance was, and then down it came. It's trying very, very valiantly to try and rally off this zone around that 60. We're trying to make higher highs and higher lows, as you can see. Same on the 15-minute chart, of course. You can see that we basically meandered all the way down to that level. But now it's pushing up past it. It's a 38.2 pullback of a fib of that very small move on the 15-minute and a 20 moving average catch. So realistically, there are opportunities to potentially move off this zone. We've seen two indecision candles already that are sort of hovering around the 20 moving average and between the 60 support zone. If we see a close above these levels, if we see a close, say, above 61, sort of 30 to 40 on a daily candle, that would give us some confidence that 62.50 is more than likely the target again. And again, I was speaking about this earlier this week. There is a potential for an inverse head and shoulders setting up here. We've got the shoulder, head, and the right shoulder. You can see here, if we do get back to the 62.50, that will make a significant inverse head and shoulders pattern at a significant zone. And the target for that would be the expected target, actually, of where we want the market to be, which is around that sort of 66 level. And that would be the target of that pattern. So we'll certainly keep an eye on that. I think this zone is very important. And if we do see some good movement and momentum to break through to the 62.50, we'll keep an eye on that inverse head and shoulders for the next potential profit zone. If, however, we get a break and it breaks past everything and we're all of a sudden the daily's trading underneath 59.80 again, then we're going to start look to those lows at around that 57 area. All right, and we'll move over to Bitcoin now. It's been a very popular one, this one. Very, very good trading on Bitcoin. Hit the resistance as we talked about, and down it came. I think we were talking about this midweek at the Pepperstone webinar, and you can see that obviously, we said again, 106 is probably the target on it, and especially when we're seeing two weakening candles, two resistance candles here that have both failed, and then down it came. You can see we've got some two very, very big, heavy sell-off candles all the way down to the 106. So from a technical standpoint, this has been actually really good because it's been trading and behaving itself in a very good manner in terms of respecting levels on the upside and the downside. It's going to be very important to see where this one goes from here, because look, to me, you've also got an inverse, well, that's not an inverse, but you've got a head and shoulders that it's actually sloping down, potentially playing out here. You've got the shoulder, head, and shoulder, and really it's a sloping neckline. Like, there's no question about that. You can see that the neckline is like that. When I draw the neckline, you'll know what I'm talking about. But it is a sloping neckline, and they're the ones that quite often can be the most aggressive. So very, very important zone around this 106 to 105 area, because if it gets broken, that's going to bypass a lot of this support that is potentially holding it up. And if it does that, there's a very strong possibility that it might find itself back down at around that sort of 93 and 94,000 level. So very, very important levels for Bitcoin. This is going to be an important hold, because if it doesn't hold here and breaks through, we might see a significant decline in everyone's favorite cryptocurrency. All right, so I hope everyone's had a great week's trading. Look, we're still in the midst of earnings, so just be careful with your trading for this week and next week until we start to see a bit of settling in the market. But there are some good opportunities to scalp. So yeah, keep an eye on those good levels and keep your stop losses very sensible in the market that we're in. Thanks very much for joining us, and we look forward to seeing you next week.